Yo, what's up YouTube? How you guys doing? Hope you guys are good. Hope you guys are living right. Welcome back to the channel. If you're around here, make sure you hit the subscribe button and turn on that notification bell. Okay, ladies and gentlemen, in today's video, I have a very exciting video for you guys. Okay, so in today's video, ladies and gentlemen, we're going to be talking about indices. All right, now indices are basically my favorite things to trade on the financial market, and that's the reason why I'm so excited to talk about this today. First and foremost, I know a lot of you guys know VIX 75, VIX 10, VIX 100, NAS 100, and so on and so forth. Now, what people don't actually understand is the index. What are indices? What moves the market for indices? How do you know, or how do you basically try to predict how indices are going to move at that particular period of time? So in this video, I'm going to be explaining every single thing you need to know about indices. And also, after you learn this, you could basically apply your own strategies and give yourself your own signals, because once you learn the root cause of a certain pair, for example the volatility index 75, you're going to understand exactly how it works. So in today's video, that is what we're going to look at. If you're going to find any kind of value in this video, make sure you guys share, like, and subscribe. With that being said, let's jump into the video. Okay, ladies and gentlemen, so what are indices? Okay, so indices, ladies and gentlemen, were basically made to track performance of a group of stocks. For example, we have the S&P 500 stock. That stock is an index that tracks performance of the stocks of the 500 largest companies in the United States. That is what we call the S&P 500. Now, we have big investors and investor billionaires like Warren Buffett that's always insisting and always advising people to invest in the S&P 500 because it is because it actually contains 500 of the biggest companies in the United States. So the index was basically made to track the performance of these groups of stocks. So now to go on, I'm going to give you guys some reasons why traders actually prefer to trade indices to currencies sometimes. Like right now, me personally, I trade a lot of indices. I trade this VIX 75. Most of my tutorials are based on these different kinds of pairs, the index pairs. So now I'm going to give you guys some reasons to why traders, or most traders, would prefer to trade the volatility indices to currencies. Okay, now some of the main reasons why traders would choose to trade these different kinds of pairs is that it actually gives it's actually a way to gain exposure to a broad market. So it's a way to gain exposure to a broad market without the need to trade individual stocks. Now, individual stocks, ladies and gentlemen, are somehow risky. You can imagine yourself trading Tesla stocks, and then let's just try to give an example of Elon Musk, because he's the owner of Tesla. Yeah, so Elon Musk is a well-known dude, self-made billionaire, and so on and so forth. And he's a little bit reckless if it comes to his mouth. He's quite reckless. He does this, he does that. He says something and takes it back, and so on and so forth. So with Elon Musk, for example, everything that he tweets or everything that he says actually affects the stock prices of his companies. Now, he's a billionaire, obviously. I mean, for him to become broke, it will take serious power or people with serious money to bring him down. So you will find, for example, he makes a tweet about something that most people don't like. People are going to start selling Tesla stocks, and the stock starts to, plummet down. There are times where Elon Musk has lost over $20 billion in just, 24 hours because of such, recklessness. I don't know if I would call it recklessness because I'm a huge fan of the guy. But either way, that's just the best way to define it. When you're trading individual stocks, it's much more risky than trading a group of stocks. So that's just an example from Elon Musk. And that's the reason why the index was created, because the index is a group of different companies, different billion-dollar companies. For example, Google itself, Microsoft, Facebook, Tesla itself, all these big companies, 500 of them grouped into one. Like that, there's much more stability, and there's a certainty to growth, because all these different kinds of companies are in different kinds of industries. So that's the first reason why traders usually choose to trade indices to individual stocks, to avoid trading individual stocks, and also because it widens the market and makes it broader. Of course, it's very volatile and it's very risky, but it's also highly profitable. It's highly profitable to trade indices than actually to trade currencies. So okay, so ladies and gentlemen, that is the main reason. I think we're going to stop on the main reason. Now we're going to give you, I'm basically going to give you how traders trade these different kinds of indices. Okay, so now traders use technical analysis to trade short term, and also they use fundamental analysis to trade long term. Now it's obviously going to make, I mean, what I'm about to explain is going to make a lot of sense for you if you have been a subscriber for a couple of months on my YouTube channel, because everything I'm talking about, most people don't understand how I formulate strategies and come up with these different strategies that work. Most people don't actually know that, but the reason why I managed to do that is because of what I'm basically talking about right now. So if you can manage to pay adequate attention to this video, you can go ahead, go on your computer or your smartphone and create your own strategy that will work for you. So traders basically use technical analysis to trade short term, and we use fundamental analysis to trade long term. Now you might ask yourself, saying, Sampa, what is the best way to interpret or rather read these charts on these different kind of indices? So the first way I'm going to talk about is identifying trends. Okay, how do you identify trends on an index chart? How do you identify a trend? So how we basically identify trends, ladies and gentlemen, is that we look for patterns in the index chart. We basically look for patterns in the index chart. As you guys can see this chart right now, this is volatility index 25. This usually signifies when we have a rising trend, it signifies a bullish market, and we have a falling trend, it signifies a bearish market. As you guys can see, this has been the case for quite some time. Now, that's what happens with these markets. It's usually sentimental. When a trend is going up and continues going up, it might go up for the rest of the day, and vice versa. So with that being said, you need to understand and learn how to identify these trends and know what a rising trend looks like and know what a bearish trend is looking like. Okay, so the second way of interpreting or reading these charts is using technical analysis. Now, we use technical analysis such as the moving average and as well as the RSI. Now, as you guys can see down here, these are what I'm talking about. Those are the technical yeah, those are basically the technical indicators and the technical analysis that I'm basically using the moving average and the RSI. Of course, in my chart, I have made my own strategy and added up the Ichimoku to help me identify a significant trend so I can be certain about them. So in this case, if you guys don't know what this is below, watch my previous videos. It explains every single thing, especially my videos on volatility index 75. Just click the video in the corner and watch that video. Okay, so another way that we can interpret and read charts on an index chart is basically analyzing volume. Now, analyzing volume is a very vital skill that every trader needs to have. So analyzing volume, just as I said, ladies and gentlemen, is a vital skill every trader needs to actually understand. Now, analyzing volume in the market actually works with candlesticks. You need to understand the candlestick patterns very well. Now, those are the things that are going to actually let you know that there's a certain kind of volume taking place on this chart right now. For example, if we look at a rise in pressure in volume may signify that there's going to be, this is a bullish signal and it will continue going. If all the candlesticks have been, for example, in this case, green and are highly high, you will find that that is a strong pressure, that is strong volume being pumped into the market, and that signifies growth, that signifies the market is bullish. Now that can literally also happen vice versa, so you need to pay attention to analyzing volume. Okay, another thing that you need in order for you to interpret and read the charts properly on the volatility indices is analyzing the news and economic data. Now, analyzing news and economic data, most people actually think that that's only used for currency pairs. No, it's not used for currency pairs. Remember, these are just a group of stocks. Volatility index 10, volatility 75, and the rest of them are just a group of stocks. So they're also literally on the market, and whatever is happening on the economic calendar, whatever is going on, also affects stocks. So make sure you see to it that that's what you're looking at. I've also done a video on how you can analyze the economic calendar in the news, just on my playlist. Again, I'm going to put the video somewhere in order for you guys to go through it and learn about it. It's very, 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 very important. Okay, last but not the least, these points are literally my favorite points. This is basically what is known as trading psychology. You're going to need trading psychology. Now, trading psychology is basically a lot of things. I mean, it's a lot of things, but I'm going to note down 4 of my favorite things that I like to use when I'm trading psychologically. Now, the first thing that you need to have is a plan. Okay, the first thing that you need to have is a trading plan. Now, I always talk about this. I know I don't emphasize too much on my YouTube videos, but of course, in my private Telegram group, I'm always emphasizing on a trading plan. You need a trading plan as a financial market trader. It doesn't matter what the hell you trade, you actually need a trading plan. You just don't get into these markets willy-nilly without having a proper plan. You need a proper trading plan. This is what causes most people to think trading is a gamble. No, it's actually serious education. It's a serious skill. You need that. It's not a gamble. It can only be a gamble when you don't have a plan, number 1. You don't know how to manage your risk, number 2. You don't have patience, number 3. And number 4, you lack discipline. That's the only time trading can ever be a gamble for you. So in this case, we're talking about the opposite of all of that. You need a trading plan. Make sure you have a trading plan. Know why you're getting to the market, what time you're going to get out, or what time you're going to get in, and what time you're going to get out, and also the amount of money you are trying to basically cash out. That's what a trading plan is. And you need to be consistent and stick to it. Okay. Another thing is managing the risk. In my previous video on 4 different kinds of risk management profitable traders use, you can also apply those 4 different things. Risk management. Go watch that video. I just uploaded that, I think the day before yesterday, or was it yesterday? I can't even recall, because I keep uploading content every single day for you guys to get educated, for you guys to get knowledgeable. So you need to learn how to manage your risk. There are all different kinds of risk management skills that I mentioned in that video, so you guys need to go watch that. And then the third one is you need to have patience. You need to have patience, ladies and gentlemen. When you have come up with a strategy and you're trading, that's the reason why usually I ask people, go try things on a demo account. Feel more comfortable. That's a risk-free, trading situation. Feel comfortable, try it on a demo account, and then when you're, comfortable enough, come through and then do it on a real account. Okay, now by the time you be doing it on a real account, you would have already understood your strategy in and out. So with that being said, when your strategy starts to go sideways, wait for it. Have patience. Have patience. It might just be a simple retracement in the market, because I remember when I started trading, I would have situations where I don't believe in my strategy too much, so much so that when it starts to go sideways, maybe I just lose a few dollars and I close the trade. And then after closing the trade, the market starts to go my way, and now I start to think to myself, damn, so if I didn't close that trade, I would have been in so much profit, such things. So make sure you have patience as a trader. Last but not the least, discipline. Discipline is very vital. Every single thing that I've talked about needs discipline. Discipline is vital everywhere, in life, in trading, in every single thing that you do in your career, every single thing. Discipline is very, very vital. If you don't follow what you have planned to death, you're going to definitely fail. If you don't follow what you have planned to death, then you definitely fail. So you need to be 100% disciplined and true to yourself that whatever the hell that you have planned is going to be done as you have said. So with that being said, ladies and gentlemen, that is the explanation for today. I don't want to make this video too long. Obviously, I haven't spoke about so many other different things, because there's just a shitload of things to actually talk about if it comes to the index, the volatility index 75. So these different things that you should understand about this is that the VIX 75, or the volatility index, is also known as CBOE, and is also known as the fear index, because it's highly volatile. Okay, volatility 75. is highly volatile. It's also known as the fear index. So always be careful. Of course, it's highly profitable, as it is highly risky. So once you understand these different various steps and how they work, follow the S&P 500 properly, and then and then you can definitely get a shot at trading volatility index. So with that being said, ladies and gentlemen, thank you so much for your time for today. I'll see you guys tomorrow for another video tutorial, or maybe a vlog. I don't know, I might just switch it up. That being said, subscribe, share if you found value, and turn on that notification bell so you can be alerted every time I drop a new video. Now, ladies and gentlemen, Telegram group down below. There's a free Telegram group. You can join that. It's a public group, free for everybody. Everybody can join, so on and so forth. People teach each other that. Beware of scammers. I do not encourage account management, and so on and so forth. And then another thing that you guys should understand is that there is also a private group, but with that private group, I'm currently charging $50 to be taught Forex, starting from scratch. What is Forex? And I'm going to give various tools to it, and so on and so forth. So that is a private group. Don't join that group if you're not willing to pay $50. If you're not willing to pay $50, you can join the public group, and yeah, you can basically enjoy some free signals in there. Signals are posted every hour and then, but again, beware of scammers, because I don't know everybody in that group. I know very few people. So there are so many different kinds of people with different kinds of intentions. So be very careful, be aware. So with that being said, ladies and gentlemen, thank you so much for watching. Peace.